There's Alberta, then there's everyone else. Andrew Grantham from CIBC World Markets joins me down the line for a closer look at the Canadian economy. Andrew, looking deeper into last Friday's jobs numbers, some analysts believe the Statistics Canada report reinforced that the Alberta economy is in a league of its own. Do you agree? And how concerning are the disparities across Canada for the economy as a whole?
Well, it's been in a league of its own for a while, and it is at the moment. And to be fair, in the next few years, it's probably going to remain that way, really, given the global demand for its key export of oil. But that doesn't mean that some of the other provinces can't move up the divisions to close the gap a little bit on Alberta. And we do see, for example, an improving US economy that could support the manufacturing bases of Ontario and Quebec. So even though Alberta is probably going to lead the pack for the next year or 2 years, the disparities, the divergences in growth rates may close a little bit, given those tailwinds for some of the other provinces.
The Canadian economy had an unexpectedly weak start to 2014, with unusually severe winter weather hampering spending across the board. Retail sales and unemployment figures are soon to be released, but what are your growth expectations for the rest of 2014?
The Canadian economy didn't get off to a great start in Q1. GDP growth, in real terms at least, was weaker than most people had expected. There was some good news, though. The nominal figures were slightly better, and that's just showed that, while Canada wasn't selling much more, what it was selling was for a higher price, and that is good news for certain areas of the economy, in particular government finances and also corporate profits. What we're seeing now is that we are seeing a rebound. Canada is kind of riding the coattails a little bit of the US recovery. We're seeing auto sales, for example, that should drive a pretty good retail sales figure next week. And also in terms of those improving corporate profits, that may suggest that business investment could be picking up in the longer term as well. That's probably a story for next year. So we're seeing some improving quarterly trends, but still pretty subdued 2.1% growth for 2014, accelerating to about 2.5% next year on that improving outlook for business investment.
The OECD also warns that the Bank of Canada faces a precarious balancing act between raising interest rates to curb the growth in consumer debt levels and keeping affordability in check. Is this the biggest challenge for the BOC at present?
It is a big challenge when the Bank of Canada do start to raise rates, which we think is going to be a story for mid-2015. We've actually done quite a lot of work on this previously, and given the high levels of household debt in the Canadian economy at the moment, 100 basis points worth of hikes from the Bank of Canada could be subtracting as much as 1.2% from consumer spending. That's the annual rate of consumer spending. And just to put that in perspective, 10 years ago, 100 basis points worth of hikes would have subtracted about 0.8%. So the Bank of Canada hikes are going to be a lot more effective in slowing the economy. Another way of putting it is that 50 basis points worth of hikes today would have done the job of 75 basis points 10 years ago. Now, the Bank of Canada realised that as much as anybody else, I think, and that's why we believe that even though the Bank of Canada may match the Fed in terms of the timing of the first rate hike, they are going to be hiking rates at a slightly slower pace than the Fed when those hikes do start next year.
The Loonie has been on the decline since the fall of 2012, though recently has picked up some steam. What is your outlook for the Canadian dollar against its US counterpart amid this rate hike race?
We think the next big move for the Canadian dollar is going to come when rates do start to go up, and when it becomes more obvious, I guess, that the Bank of Canada aren't necessarily going to keep pace with the rate of rate hikes that the Federal Reserve will be undertaking starting next year. So, but before that, we see it kind of range bound between with USD CAD around or in between kind of 107 and 110. That next big move will be weaker when the Bank of Canada are raising interest rates at a slightly slower pace than the Federal Reserve. So starting in the middle of next year, we could see another weakening of the Canadian dollar maybe with USD CAD approaching about 116 in middle of 2016.
Andrew, great to speak to you. Thank you so much for your time. Well, that's all from Andrew and myself for the moment. For more currency outlooks, tune back in tomorrow for this week's third and final instalment of Forecast with Sophia Aribo. Bye for now.